All right, today we're digging into Thermo Fisher Scientific, ticker TMO, and this isn't just about some huge science company. It's about a really critical investment case for today's market. We're talking about a true titan that's navigating some pretty interesting times.
So let's get right into it. Thermo Fisher is an absolute powerhouse, no doubt, but it's also facing some real headwinds. You've got China, a slowdown in biotech funding, and frankly, the hangover from its massive COVID-era boom. So the real question for us as investors looking at TMO today is what's the actual story behind the headlines?
To really understand Thermo Fisher, you have to start with its number one strength, its incredible, dominant market position. The best way to think about TMO is as the ultimate picks and shovels company for the entire life sciences industry. They aren't betting on one specific drug to win. They sell the essential gear to literally everyone in the race.
Now, in the investing world, we call this an economic moat. It's that special something that protects a company from competitors. And let me tell you, Thermo Fisher has built one of the widest, deepest moats you are ever going to find. So what exactly are the bricks that make up that fortress wall? Well, it really comes down to these 5 things. First, their sheer scale is just off the charts, giving them insane power in everything they do. Then you add in the massive switching costs. I mean, once a lab is built around their equipment, it's just way too expensive and complicated to change. That creates this huge installed base that basically acts like a recurring revenue machine. They're also absolute pros at M&A. And the secret sauce holding it all together is their PPI business system. It's this internal culture of constant improvement that just keeps making them better. So how does this incredible moat actually make them money? Well, the genius behind Thermo Fisher's financial stability isn't just its defenses, it's their brilliant, and I mean brilliant, and highly profitable business model. It is the classic razor and blade strategy just executed on an unbelievable scale. They sell you a sophisticated piece of equipment, that's the razor, which then locks you into buying years and years of their high-margin proprietary blades, which are the things you need to actually run it. And this number? Wow. This number right here tells you everything you need to know about the power of that model. A mind-boggling 82% of Thermo Fisher's revenue isn't from selling a machine one time. It's stable, it's recurring, and it's incredibly predictable. And here's the breakdown of that 82%. See, the actual instruments, that's less than a fifth of the business. The real money, the gravy train, comes from the consumables and services that labs and companies have to buy over and over and over again. For an investor, that means amazing revenue visibility and a ton of resilience, even when the economy gets rocky. Okay, but you simply cannot talk about TMO today without talking about the pandemic. I mean, it created this massive, once-in-a-generation boom for the company, and understanding what happened next is absolutely key. This revenue chart tells the whole story. You see this steady base back in 2019, and then, boom, revenue just explodes, fueled by COVID testing and vaccine development. Now, as that demand has faded, things have normalized, but look closely at 2024. They are still operating at a much, much higher level than before the pandemic ever started. The headline numbers might look a little flat, but that's hiding the real story. And this right here is probably the most important point. Even as billions in that super high-margin COVID business vanished, their underlying core business kept on growing. That just goes to show you the fundamental strength of the company, completely separate from that one-time pandemic boost.
Okay, so that brings us to today and the challenges that are really on every investor's mind. The post-COVID world has created some pretty significant, very real headwinds for the company.
And this is really the central tension for anyone looking to invest in TMO right now. You've got to balance these very real short-term pressures against these incredibly powerful long-term tailwinds, like the growth of precision medicine and healthcare spending all over the world. Let's get specific on those challenges. China, which has been a huge growth engine, saw revenue fall by high single digits recently. The bioprocessing side of the business is also feeling the pinch as biotech funding gets a little more cautious. And maybe most importantly for the bottom line, those sky-high profit margins from the pandemic have come back down to earth, settling in around that 22-23% range. So, okay, we've talked about the problems. But facing headwinds is one thing. Having a solid plan to get through them is something else entirely. So let's look at what Thermo Fisher is actually doing to drive growth from here. Management's game plan is pretty clear.
They're leaning hard into innovation in the hottest areas of science, things like cell therapy and proteomics. They're also strategically pushing into high-growth markets. And all the while, they are keeping that M&A engine humming to buy new tech, like their recent Olink deal. This is their formula to get back to that long-term goal of 7 to 9% organic growth. And here's how they plan to spend their cash, which as an investor is exactly the kind of clarity you want to see. The top priority is clear. The majority of their capital is going towards smart acquisitions to fuel more growth. But, and this is huge, the significant chunk that's left over, up to 40%, is dedicated to coming right back to us, the shareholders, through growing dividends and buying back stock. It's a very clear value-focused playbook.
So let's bring this all home. We've seen the moat, the business model, the crazy COVID roller coaster, and the plan for the future. Now it really all boils down to a few critical questions that every single one of us has to answer for ourselves.
Here's the bottom line, really. Thermo Fisher is without a doubt a best-in-class company, but it also trades at a premium valuation, and it's doing that right in the middle of some very real near-term uncertainty. That's the core dilemma. So the first question for you is this. Do you believe that core business, stripping away all the COVID noise, is truly strong enough to get back to that long-term target of 7 to 9% growth? Second question, can management successfully steer the ship through the slowdown in China and get those operating margins to stabilize and hopefully start growing again into that healthier 23 to 25% range? And third, after all of these huge transformative acquisitions that have turned them into an end-to-end partner for drug companies, is their competitive moat actually wider and stronger today than it was even 5 years ago? And all of that leads us to the final and most important question. After you weigh all the evidence, the incredible strengths of this business, and the undeniable risks it's facing, is Thermo Fisher's premium price tag justified for you as an investor right now? Your answer to that is everything.